Folks, violence and three major things to discuss. Number one, a record number of Americans in a new survey are expecting 2023 to look like something out of a horror movie. Number two, new data shows an innovative way that hedge funds are profiting off this market. No, it's not by harvesting the souls of the young. Well, at least it's not exclusively that. Finally, number three, the latest updates and trade ideas, including a couple of nice wins with our Tide and VVOS plays that we briefed on this morning that ran quite a bit after new catalysts that we found. I will talk about what you need to know moving forward. Timestamps below, let's get right to work. And today's video is brought to you by the Moomoo Trading and Investing Platform and Broker. It's an excellent app to help you take your trading to the next level, and they are offering up to 15 free stocks if you sign up and deposit using our link down below. Okay, folks, the survey is out, and the survey says Americans think 2023 is going to look something like this, but far, far worse. According to a new Gallup survey, almost 80% of Americans think the U.S. will experience great economic difficulty in 2023. Now, I know what you're thinking. Charlie, only 80%? How can 20% of survey participants be so blind? Do we have a shortage of optometrists? Here are some of the main points in terms of economic issues. 81% of participants think 2023 will be a year where taxes rise rather than fall. 79% think that 2023 will be a year of economic difficulty as opposed to a year of economic prosperity. 78% think we'll see the federal budget deficit increasing instead of decreasing. 65% think prices will rise at a high rate. 63% think this is going to be another year of a falling stock market. 53% think this is going to be a year of rising unemployment. And in terms of politics, 90% think this is going to be a year of political conflict. 90%. 72% think it's going to be a year of rising crime rates. Oh, fantastic. 56% think it's going to be a year of many labor union strikes. So to summarize, higher taxes, economic difficulty, more deficits, higher prices, falling stock market, rising unemployment, political conflict, rising crime, and, of course, more labor union strikes. In other words, the entire country is going to look like my home state minus the overpaid tech jobs and snooty actors. If you believe things are going to get better this year, you are now in the very, very, very slim minority. And I know that there's this idea out there that, hey, if everyone is crowding on one side with one consensus opinion, maybe it's time to flip to the other side and be a little contrarian Hungarian. I couldn't think of anything else that rhymes with contrarian. No offense to our Hungarians. We love our Hungarians, but this contrarian Hungarian argument misses a crucial component. If you're in a building and you see a fire break out and it's burning the heck down, and the consensus opinion amongst the people within the building is that there's a fire, does that mean that the fire is probably over and you have nothing to worry about? No, it simply means that everyone sees the damn fire and you should go running and screaming for your life. The number of people that see a fire and agree that the fire exists has no relation to the fact that there's a fire. People could realize it sooner or later, but that again is irrelevant. The fire will burn everything down whether or not Sally and Susie see it coming. But wait, Charlie, consensus opinions can create self-fulfilling prophecies though. Yes, exactly. So it's actually worse than my analogy. If the majority thinks we are heading for a recession or further dropping stock prices, they'll change their behavior accordingly and make the situation far worse, far faster. It's like if the people in that burning building see the fire and then decide to light matches and throw them everywhere as they run out. It's just going to compound the issue, right? So folks, be careful with this contrarian ideology. Don't be a little contrarian Hungarian. Again, we love the Hungarians, but not the contrarian ones. This contrarian ideology has been pushed every single leg down from all-time highs, and it will continue to get louder and louder the further we go down. The truth is, if you look back historically, we always have a switch from bull and bear periods, so contrarian trades end up being right at some point, but the time period is the most relevant part, right? If you're shorting all-time highs for 5 years before a crash, well, that's a lot of pain that you have to take. Same thing if you're buying lower and lower lows for years. It's not that that can't be a good strategy, it's just that if you don't have the right expectation, you're going to get screwed. And it might also not be the most efficient way to do things. Contrarian trades work well on micro levels with squeezes and so on and so forth on a weekly basis, but they don't work as easily with broader market trends because those tend to be a lot more nuanced and oftentimes long-winded. They only look easy in hindsight. Oh, buy when things are low. Okay, but are they going to go lower? Are they going to stay low for years? Are they just going to slowly crash for years? Things that you got to think about, because if you're buying and you're thinking you're going to get an immediate recovery, well, you've got another thing coming. Moving on, we've now got a new definition out. We are now no longer heading for a shallow recession, but rather a slow session. This is the next escalation. I love the evolution of the economic outlook amongst analysts and the investment industrial complex. First, it was no recession, ever, never a recession. You're a conspiracy theorist if you think we're heading for any kind of slowdown. And then it was, okay, yeah, we'll get a shallow recession. No biggie, shallow kiddie pool recession. And now it's like, okay, yes, it's going to be a real recession, but it's not going to be a big deal because it'll be slow, very, very slow, a snail, a slow session. Next, they're going to say, oh, it's just a mild apocalypse. Don't worry, just a little apocalypse, mini. And this, folks, is exactly what I've warned about since the beginning of 2022. The financial media and the analysts, and again, the investment industrial complex will turn up the heat slowly and ease you into the idea of accepting that we are heading into a massive full-blown economic apocalypse. Next, a new hedge fund is out and they made 163% betting everything is going to go down. The fund is called Eagle's View Capital, but they are not bald. Ha, get it? Because bald eagle? Ha, okay. But this fund was launched specifically to catch the market downturn, and when asked about the thesis of this fund, quote, the $19 trillion of sovereign debt trading at negative yields, the SPAC boom, the crypto boom, private equity valuations, and public equity valuations, they're all stripes of the same zebra, said the founder, the zebra being the ocean of liquidity, first in response to the great financial crisis and then to COVID, and now, of course, we're seeing the complete opposite of that, which is a draining of that ocean of liquidity, right? So you're seeing a reversal of all of these different things that we benefited from the last few years. And he's apparently planning to keep his short positions open for years, and he says he's not falling for short-term inconsistencies and short-term little reversals here or there. Quote, you have your variations, your rallies day to day, month to month, he said, but big picture, everything is going down. Price action is ultimately the Bible. This is one of those statements that really separates a lot of people. A lot of people see a 3-week rally and say, oh, okay, it's been rallying for 3 weeks. Obviously, that means that the bear market is over. Anybody that thinks it's not is just a relentless perma-bear. But somebody that's logical and looks at the bigger picture would say, hey, wait a second. Okay, yeah, we had a 3-week rally, maybe a 2-month rally, a 3-month rally, but it's still in a year-over-year downtrend, and the variables that caused it to go down are still worsening. So it's pretty rough to declare an end to the bear market just because you're seeing a little rally-to. Now, what are some of the other ways that hedge funds are making money? Well, the folks over at Roto-Rooter, or rather Reuters, surveyed 10 global asset and hedge fund managers, and what did they find? Well, they found that most hedge fund managers are reassessing their life decisions and giving back to the community in this hard time. LOL. Just kidding. Here's what they said. Number one, they are expecting the end of the king dollar as a Fed policy shift is getting more likely. They think China is going to be a big comeback story. They think the re-emerging markets are going to see some gains after 2022 delivered some of the biggest losses on record. They think bond prices are going to go back up, and their view on equities is sell now, buy later. One of them said, quote, I wouldn't be surprised if the time to buy equities is a year away or a bit longer. Now, I don't know about you folks, but that sounds pretty optimistic to me. It'll be pretty damn hard to buy stocks from the caves that we're living in when the economic apocalypse destroys almost all of our modern civilization. But the good news is, without all this modern, useless technology, well, guess what? We're all going to be ESG compliant, which means that we're going to be a lot more morally and socially superior. I'd rather live in a cave than be called not ESG compliant, but that's just me. Hey, not all heroes wear capes. Next, trade ideas. So I want to go ahead and start with Tide. So Tide, if you remember, was a spinoff from BBIG, and it appeared on my radar this morning because of the unusually active pre-market session. We briefed on it at about 28 cents, and it ended up running to 57 cents, which was slightly more than a double briefing to highs. What was the catalyst? Well, they released a press release with new corporate priorities. Prioritivo, things like identifying and prioritizing revenue-producing businesses, developing a strategy for efficiently acquiring capital for long-term growth, launching new new SaaS products. Ooh, quite sassy. Identifying and evaluating potential acquisition targets, continuously monitoring market conditions to remain competitive. And I mean, if you read this overall release in all of its glory, well, it seems like it's about as surface level as it gets. I mean, one line literally says, we will carefully evaluate potential opportunities and select those that align with our long-term objectives and provide the greatest potential for success. Oh, okay, that's great. I thought you'd recklessly evaluate opportunities and choose the ones that have the highest potential for failure. The shit that passes for investor relations these days is hilarious. But anyways, previously hyped small cap plus big press release plus media talking about this everywhere equals high probability of a massive stock price move, and that is exactly what happened. Lesson, well, yes, this is pretty repetitive. I've pointed this out in the last few videos, but right now there's a lot of catalysts that are dropping in the pre-market, causing a mini rally that sometimes causes a take profit period before the rest of the market finds out about it after open and buys it up again. So if you can identify the catalyst in the pre-market, you may find that oftentimes you have higher odds of playing the next moves successfully. But do not be fooled. They can run, but they dive just as fast, if not faster. And by the way, I want to talk about Kala really quickly. When reflecting on Kala before this trading week started, I said word for word, if you want to see momentum continue and get a new high, the best chance you have of that is for it to sell off to the previous leg's lows and then bounce. And that is exactly what happened. It bounced right off that line and hit 56 at highs today. People say, Charlie, patterns don't always work. They don't work 100% of the time. No, but they do work enough. Human psychology isn't as variable as many people think. That said, I do continue to think that Kala is on its last legs. Once this round of momentum dies off, Kala is going to get destroyed. This is a stock that is now up almost 10x from our briefing price at 640-ish a share, and I'm not thrilled about the idea of anyone trying to FOMO into this. I think at this point it's kind of a trap. But speaking of FDA players, the other one that's probably worth talking about is Vivos. Vivos was just another example of the many FDA plays I'm expecting to see this month. We briefed on it 30 minutes prior to market open at about 140-ish a share, and it ran into open and after open to 296. Why? Well, they received FDA clearance for their sleep disorder therapy. Knowing that FDA catalysts are running quite a bit right now, that added to the euphoria and helped skyrocket the stock. Now, this was the full list from the morning catalyst section of the morning briefing this morning. Two of them ran more than 100% briefing price to highs. Jern ran a little bit briefing price to highs, 10-ish% before flattening out. AMV saw a take profit period at open that triggered our bear market criteria or our bear criteria. Vera is an overreaction beat-down candidate that I'm excited about, and we are looking for a bottom and contrarian rally for that one. Probably going to happen later this week if I had to guess. CRKN had an interesting acquisition and take profit cycle. Maybe some residual spike coming in the next couple of days, and that's overall the bigger picture on the morning catalyst from this morning. A lot of people were asking, Charlie, can you share some of the other tickers that you're looking at and watching and tracking? And so I wanted to post this for everybody to see. A lot of times when we brief on something, the stocks end up showing relevancy, not just the day of, but oftentimes maybe a few days out. So if you are somebody that is getting up every day and watching the pre-market and trading, this list can be very, very helpful. I recommend writing it down in addition to the FDA approval plays that we shared earlier this week. Anyways, that's pretty much it for today. There's lots of opportunities out there. You just got to show up every day and know what to look for, and we'll do our best to help you on that. If you'd like to start the new year on the right foot and join us in ZipTrader U, I will put the link to that down below. Membership includes our step-by-step lessons on stock market strategies and risk management, our private chat, the morning briefings we just talked about, and more than that you can learn about with our link in the description down below. Anyways, have a great rest of your day. Make sure to hit that ravishing like button, and we'll see you in the next video.